There is breaking news on the cost of living. The new inflation rate for July was just released. CBC business reporter Scott Peterson is going through those numbers. We'll bring you up on the screen now. Scott, what do they show?
They show that it's a step in the right direction. The prices are actually coming down, but we're seeing a broader movement of food prices, of general prices. The core inflation rate is actually rising. The official rate is 7.6%, and that's down from the 8.1, the record high, the 40-year record high that we saw just in the month of June. So that is where we're seeing a step in the right direction. But what's responsible for the pullback is the price of gas. And anybody filling up the tank for the family knows how high that remains. But we saw it come down about 10% in that month, but gas prices from this time last year still up 36%, but they had been up 55% in June, so hence that's why we're seeing a little bit of ease as far as the inflation rate. But when you dig into these numbers, they're a little bit alarming because we're seeing a broad movement of prices to the upside. For example, food prices up close to 10%, and that's the highest rate, annual rate that food prices have increased going back all the way to 1981, and that's when we had double-digit inflation. So a little bit of a worrying sign continuing for anyone buying groceries at home. Bakery products, for example, up 14%. A lot of that attributable to what's going on in Ukraine and the Russian invasion there. A real bread basket is impeded. We've got sugar and desserts up 10%. And the list goes on there for food, severely to the upside. And a lot of what we buy comes from the U.S. as well. Traveler accommodation up 48% from this time last year. Airfares month over month because there's a huge demand there, and also an increase for the fuel prices up 25%. Shelter costs up 7%. So a whopping increase for general inflation to the upside, but that headline gas price coming down, and hence that's why we're seeing a little bit of an easement on the inflation overall at 7.6%, Suhanna.
So don't be fooled by all the sweet. What's the reaction from economists, Scott?
Yeah, that's what the economists are looking at too. They're looking at the core rate here, saying that this is a step in the right direction, that this is a modest cooling, and these are both good things. But really the eyes now are on the Bank of Canada and how they react to this. We are expecting perhaps in the neighborhood of about 8% inflation for the rest of the year going forward. And so the Bank of Canada is still expected to raise interest rates another perhaps 50 basis points when they next meet September 7. So no easement there. And if anything, this puts more pressure on the Bank of Canada to raise rates because of all these little core things, the food inflation going up, travel inflation going up. So still pressure on the Bank of Canada to raise rates, Savannah.
Right. I know you're on it. Thank you, Scott.
You bet.
Well, this is our top story. We'll stay on it. Our Chase team has reached Kevin Page in Ottawa. He is a former parliamentary budget officer, also president and CEO of the Institute of Fiscal Studies and Democracy. Kevin, let's pick up where Scott left off. Bank of Canada meeting September 7th. What's going through their heads right now as they look at this inflation rate?
Yeah, so, Suhanna, good to be with you. They're definitely combing through these numbers that were just released. Yeah, I think they're, as Scott alluded to, they're going to be somewhat concerned about just, how inflation seems to be getting sort of broader entrenched in the numbers, so across many different components. But overall, I mean, it's on balance, it's a net positive, I think, because we're seeing declines in the year-over-year rates, but also even on a month-to-month basis, these are better numbers. This is a smaller increase in inflation than we've seen in many months.
I'm just not understanding how you can call it net positive when, I mean, I love sweet stuff. Who really doesn't? Up 10%. Food up almost 10%. Airfares 25%. Shelter up 7%. How do you call that net positive?
Yeah, so I think the expectation is, this type of inflation that we're dealing with, Suhanna, at 7.6%, we're kind of, we're roughly where the Europeans are on balance. We're a little bit lower than the Americans. As people are looking, the global outlook is starting to kind of weaken somewhat. We're seeing some flattening of commodity prices. So I think, from the point of view of these recent increases in interest rates, I think the bank's going to say that it's starting to have an impact on slowing down demand. We're seeing in commodity prices. I think we're seeing in the housing market asset prices. So I think in a sense that these higher interest rates that are starting to work. So, is it possible that we'll see smaller increases in interest rates increments? I think it is possible because these numbers are moving in the right direction, notwithstanding this high year-over-year inflation across many components.
I know one of the things you've told me in the past, Kevin, is that it takes a long time for those interest rates to sort of work their way through the economy, for inflation to start dropping, for that interest rate as it continues to go up. People have the shock value of that, but then maybe in the next 6, 9, 12 months, we'll start to see it pay off. Is that really, when we look ahead to September 7th, should we be keeping that in mind? Like, expect a shock shock, but it will pay off over the months ahead.
Yes, I think, as Scott alluded to, I think the expectation still is that the bank will raise interest rates on September 7th, probably something in the neighborhood of 50 basis points. I think because that will put the, with, their overnight rate, their policy rate at 3%, which is kind of in their, in their what they would call a normal interest rate for an environment which is not highly inflationary. So, I mean, I think there's still upward pressure on these interest rates. Yeah, but the news, I think, because the news is kind of moving in the right direction. I think the big uncertainties still are the Russia-Ukraine war and how that will impact commodity prices going forward. So we're seeing some help on oil prices, on gasoline prices, but this could reverse itself if something happens, unfortunately, in the fall time.
We're continuing to watch as a news team that war in Ukraine, and I know as economists you're watching it from the the dollar sign perspective as well. Is there anything in these numbers, Kevin, that causes you a little bit of angst or worry?
Yeah, the angst is that we've seen the inflation become more broadly entrenched across all the components. Like if you look at this release, Suhana, you'll see that there's really only one component where we're seeing year-over-year inflation rates less than 3%. That's kind of the clothing indicator. Everything else is well above 3%. So those higher energy prices, those higher food prices, they've kind of filtered their way through, and they've kind of created this higher inflationary expectation environment. That's the thing I think that the bank continues to worry about.
We will talk again, Kevin. Always a pleasure to have you on the program. You be well, okay?
Great to be with you, Suhana.
Kevin Page, he's a former parliamentary budget officer, and we reached him in Ottawa.